Hey everyone, I want to share this video regarding the recent events in Venezuela. This is a unique event that has made international headlines. And my research partner, Nanette Jacobson, who is the managing director at Wellington Management Company, has some thoughts that I'd like to share. These thoughts are as politically neutral as possible and focus more on the economic implications. So, the capture and arrest of Venezuelan President Nicolas Maduro on January 3rd will have broad geopolitical and global market implications potentially for years to come. While the situation remains fluid, there are many unknowns, but markets are viewing the events as positive, with Venezuelan bonds and equities both up as of this video, in addition to equities in many Latin American countries and developed markets. Developed market bond yields are down on the expectation of lower inflation, giving the Federal Reserve room to ease rates further this year and maintain supportive conditions for risk taking. Oil prices are up due to a near-term supply risk, but also possibly because positioning was already short. Gold prices are up as well. We think short-term positive reaction is supported by the overarching expectation that Venezuela will eventually be able to produce much more than its current million barrels per day. The country's oil reserves amount to about 300 billion barrels, or 20% of the global reserves. So there's plenty of upside. After more than a decade of neglect and mismanagement by the Venezuelan leadership, President Trump is focused on revitalizing this industry, increasing production, and transitioning the Maduro government to one with U.S.-aligned interests. Against this backdrop, we'll be tracking four potential sources of uncertainty. The first is time and money. Restoration production will take time, money, and a regulatory framework. Estimates suggest it'll take between 80 and 100 billion to restore the facilities. So we'll be watching for signs of this investment. Two is political instability. Free elections aren't being contemplated at this point, despite opposition leader Maria Machado and her party having popular support. So we'll be watching for strikes, violence, and other forms of unrest. Three, the degree of compliance. Hardline Maduro supporters are still leading the military and intelligence. Will the country's interim president, Delcy Rodriguez, be able to comply with U.S. demands if the Minister of Defense and Intelligence Chief are committed to the regime's survival? So we'll be watching for changes inside the regime. And broader conflict. At this point, it's unclear what conditions the U.S. administration might stage another military action. There's also broader geopolitical questions. If spheres of influence are becoming more hardlined, will the U.S. back away from Ukraine or Taiwan? Could we see an escalation of the U.S.-Iran tensions given Iran's close ties to Venezuela? And the U.S. concerns about the nuclear, missile, and drone programs? So this could be another reason oil prices moved higher in response to the U.S. raid. On the other hand, since China and Canada could be hurt by moves to redirect Venezuela's oil to the U.S., Trump may have a stronger hand in the trade negotiations. So investment implications. Notwithstanding these risks, in the short term, we see several positive investment implications. One is the expectation of more oil supply and lower prices that could put a cap on overall inflation, though it may not have a material effect on service prices. Lower inflation could support further Fed easing, which would be a powerful signal and would contribute to liquidity in the financial system. For U.S. oil refiners, with lower prices for heavy crude, refiners can buy it at a discount and sell refined products priced off global benchmarks, boosting margins. On the other hand, we see a negative impact for U.S. oil producers given the prospect of oil prices being lower. Three, emerging markets. We see potential opportunities in select debt and equity markets in Latin America, in particular that could benefit from closer political and trade ties to the U.S. For precious metals, increased geopolitical volatility and fragmentation of the global order could support precious metal prices. Miners might also get a lift as energy is the largest cost. And 5, for long-dated government bonds, along with relatively steep yield curves around the developed world, lower inflation expectations and potential Fed easing could benefit the price of bonds. All in all, we've seen positive impacts and more opportunities have been created. Risk and uncertainty always loom, so if you have questions, shoot me an email or give me a call. Thank you again for your trust in me, and have a good weekend.